Hi everyone, welcome to this video. I thought I would do a video with regards to my Facebook post where I had two charts that you can see in front of your screen. I put both of them up and I was asking what direction do you think they'll go in. Now, as I said in my post as well, this is an example of fractals, so I'm going to discuss fractals in this video as well and just give you a kind of understanding of fractals if it's something you're not already aware of. I know a few of you are already aware of fractals, but it's good just to reinforce that if you're already aware of it and look at it and see how it can potentially be used. First thing I'd like to say is Happy New Year. I hope you've had a fantastic festive period. I'm recording this on the 6th of January, so this is it. It's Monday. We're time to get back into it. I found it fascinating that on Facebook there's a lot of people that are for obvious reasons, and you might be in this camp, that they're not happy going back to work. The one thing I would say is if you're either in that camp or you see people in that camp, it's a great reminder of why you're doing trading in the first place. Trading can give us wealth and can give us the ability to free ourselves from the rat race to pursue the things we want to pursue. And that's a timely reminder because January and February are often some of the more difficult months as you try and get back in to things and the weather's a bit, not so kind, etc. So use that as motivation to get yourself thrown back into your trading and learn as much as you can and take on as much as you can and do as much as you can to get towards your own personal goals. I had a fantastic 2013 for a nice rest, and I'm looking forward now to another successful 2014. Which is, all good, and I look forward to sharing that and seeing more people progress the way we have done, because last year was a great year for students in the room and across the board, which is really pleasing. Okay, so fractals. Fractals are basically patterns within patterns. Now, the reason I wanted to put this up is this is something I had been eyeing up towards the end of the year. And it was one of those, I just happened to come across this as such, but it got me into thinking about fractals, and I thought it would be good to just do a little bit of a session, and it was when I seen this chart here. Now, this chart looks like any other chart, and what I've deliberately done is I've left it blank. I've not put indicators on, I've not put price studies on, I've just left it pure candle and nothing else. And the reason I wanted to do that was just to illustrate fractals, and they are best expressed through price. Because the number one thing about trading is price analysis, because without price analysis your price studies are inconsistent, your indicators are inconsistent, you yourself will often have an inconsistent approach if you don't have a solid underlying price analysis in what you're doing. And you'll notice from some of the feedback, we got quite often quick answers up and down, but there were some answers that are adapted or elaborated a little bit more on the analysis, and that's where you can see that people bring in price analysis. So one of the first things you want to be asking yourself is when you're looking at charts, are you doing your price analysis? Are you doing enough of it? Is it effective? And then where does the strategies, the price studies, the indicators, etc. come into play? If you're loading charts up and the first thing you're looking at is price studies, indicators, etc., that means that the chances are you're not doing enough with your price analysis, which could be a big clue as to why you've maybe not quite found that consistency yet. Now, with the fractals, what we actually have here is this is a yearly chart. Now, what's amazing is I honestly can't say I would trade a yearly chart. I've never traded it, and I don't see myself trading it going forward. But the reason I want to highlight this is I find it fascinating to what this market's telling me. Now, what I've got across here is a 5-minute chart. Now, from a like-for-like example, it might not be the best, but the markets are never going to be that precise. But it does give us an example of we've got very similar looking patterns on the two sides of the spectrum. A yearly time frame shows a big move up, and a 5-minute shows a big move up. And if it wasn't for putting those time frames in, and that's why I left everything out, you wouldn't know, would you? And that's a great example that across any time frame you'll see the same patterns, and that's what fractals are. Fractals are patterns within patterns within patterns. So what you get is the very same patterns, whether it's a 5-minute, a 60-minute, a 4-hour, the daily, the weekly, the monthly, and even we go into quarterly and then yearly. So that just gives you a little bit of a summary of what fractals are. Now, where they become incredibly useful is you can use that for multiple time frame analysis. And that's why fractals can be really beneficial. So if you know on a daily time frame the overall market's trending up or down, you can use that knowledge in your day trading on a 5-minute, a 60-minute to trade the same direction as the trend. So you could trend a pullback while you've had a pullback playing out on a daily, and that's how you can use it. Now, with regards to the direction that I could see this market going in, and if you're not already aware of it, this market's gold. Now, some of you might have already noticed that. Some of you might went and found what market it is. To be honest, doesn't really matter to me what market it is. What matters to me is what the information is on that market, which then will allow me to look at how I would make decisions and what decisions there are. Now, what you'll notice is, if you look at the Facebook post, as I say, most people have just done a simple up and down. There's a few people that have added some additional comments in. I thought one of the best to highlight, actually, was, where are we? It's Tim. Now, what Tim has said, and this is so true of trading, Tim has put down, although it could be up, that's the trouble with trading. Now, the reason I want to highlight that is that just summarises the issue you have with trading. Because whenever you're looking at anything, you want to have such a clear picture on what you see that you have a simple bias. Is this market going to go up or down? Potentially go up or down, because we'll never know until afterwards, and we know that it can go for and against us. But we want to have a clear pattern. So if you ever find yourself where you look at a chart and go, well, I think it could go up or I think it could down, if you can't clearly verify that and back it up and know, right, the information stacks up in the favour of down or up, you should walk away from that market. And that's a really, really important point to highlight. Now, as far as what I think, for me this market on both the yearly and the 5-minute was looking more down than it was up. Temporarily. Because here's the thing, the market's made new highs, hasn't it? In both occasions we've made new highs. However, the market's now pulling back, and that's where, for me, temporarily, I would say the market was more likely to go down. But let's break this down a little bit further and show why I think that. Okay? So, if we look at the yearly, the first thing I have is a reversal candle here. So that's the first clue. The next clue, from a very crude but simplistic and incredibly useful point of view, is the number of candles we've had that show green. In other words, the number of up candles. You might not be aware of this, and I've just skipped a number because I was about to go to 10. 6, 7, 8, 9, 10, 11, 12. You might not actually be aware of this, but gold has gone up and finished positive for the last 12 years. Now, that's a fascinating stat, in my opinion, but it brings in probabilities. If you had seen any market, whether it's 12 years, whether it's 12 5-minute candles, 12 60-minute, 12 240s, would you be more inclined to say the market's likely to continue going that direction, or to then potentially go that direction, or even we get the old sideways move? So for me, when I look at this starts to tell me that, well, this market's quite extended to the upside, so I wouldn't be too pleased about looking long at this moment in time. I would like to see one of two things, which is a move down, or alternatively a sideways consolidation, something that illustrates an opportunity for buyers to come back into this market. So what we've got now is, when we look at 2013, which is now a finished candle, we've got a very, very strong bearish candle. Now this candle as well engulfs the body of both the previous 2 years. So what we can see here is we can clearly see a solid close below this low of 2011, which is also the reversal candle, the engulfing of this body and this body. So there's a massive indication that this market, regardless if it's yearly, daily, 5-minute, is looking more likely to go down. So for me personally, I believe that this market looks more bearish. So my answer is down. Now, is my answer the same here? Almost. My bias is definitely down, and I'll explain why. Again, we've had a move up. So there's 3 little up candles, followed by 4, 5, 6, 7, and then we start to go a bit sideways. Now, where this is slightly different though is I get the reversal candle. Brilliant. That's where I'm starting going, right, okay, there's a reversal candle, let's consider this. But the problem I have is I've almost got an opposing reversal candle going in the opposite direction. At that point, I'm starting to question, is this a proper reversal? So this time frame, which is the 5 minute, this has to prove itself. Now how would it do that? Well, there's a number of things we could look for, but for me personally, I would want a close below this area for me to consider short. Now, if it was to close down here, then I would definitely be going, right, I would consider shorting this market because I've got space down to the next level and it's done an extended move in that direction, as we do with gold, for instance, on the yearly. We've got the 5 minute there. So the answer to my question is, what direction do I believe the market? Based on my technical information, I would say down. What I would say is, when I look at the yearly and when I look at how strong 2013's down candle is, that tells me that whenever you see large, strong candles, quite often, but not always, but quite often they can be followed by a bit of indecision, a bit of sideways, even a bit of a reverse. So I wouldn't be surprised to see in 2014 maybe a bit of upside. I wouldn't necessarily expect it to be massive. Now, we can see where we end up at the end of the year, but it doesn't matter if I'm right or wrong, because that's me giving you a guess about what could happen. What I have to do is look at things technically and bring in my strategy. So if I was looking to trade this, I would be saying, right, well, now that we've got the close below the reversal candle, if we break these lows, I would look to trade it down. Where would my stop be? Up here, target down here. Okay, what's the risk to reward like? It's okay, it's not great. Similar here, if we close down here, right, I would get in below here, stop up here, back down to here. Basic price-based trading. I might have a strategy on top of that, of course, but you can see where I'm going with this. Now, what would make sense is, we don't know what the year's going to do yet, but we could have a look at the 5 minute and see what the 5 minute did. So, if we just bring in the 5 minute, that's us here. Now, what was interesting, when I spotted this, it was literally, I just wanted to find a very quick example. Well, not find a quick example, but just find something that was showing a similar type move. So what we had, and what you see is, we had this move up. What you never seen was the fact it was in this little area of resistance, so it made sense that we got that little bounce. But again, what you'll see is, if you remember, we wanted to close below here. So if we just play it forward, we get very close to that, but we don't close below it here. So let me just widen this out so it's very visible for you. So what you'll see is, we don't close below, then we move down, but again we close back above. So at this point, I'm now getting a lower level and saying, well, I would really need to close below there. And then it's starting to get messy, and then I'm saying, this is becoming too much effort. The market's fighting here. So from there, we go sideways, sideways, and then we break out. Now what's interesting is, I started both of these, looking at the 5 minute, and I've looked at the yearly, with a bias that says down. That doesn't mean it's going to go down. It also doesn't mean it will go up. But I have the information, and there was enough. But that's when I bring in my subsequent price analysis and my strategy. And the 5 minute never played out in a way that was tradable, and we'll see what happens with the yearly at the end of the year. But what's good about this is it gives you a really simple example of fractals in trading, which can be incredibly valuable when you get that combination coming together all at the same time. That is high probability trading. And it's also a good reminder that in trading there is no right or wrong. So even if I look at and analyse and look to see that a market might go down or up, even if it does or doesn't do that, it doesn't make me right or wrong. What's important and where I am right or wrong is, have I followed my rules and my plan, and over the long term, am I profitable? That's what matters the most. So I hope that's been useful, guys. It's nice to start off the year, get the brains working again. I'm really excited for 2014. I hope you guys are. If you're feeling a bit blue because it's the 6th of January and we're getting back into work and back into things, remember your goals. Look at your ambitions. Look at what you want trading to achieve for you. Get yourself excited. And we are really, really looking forward to working with you again in 2014 as you work towards your own personal goals, as we work towards ours. So for those that are part of the room, I will see you tomorrow when I'm back in, as we get the live trading room opened again. Market commentaries will start up, so you'll get your first market commentary at the start of next week. And everyone else, if you've got any questions, if you get any trades, if you're doing reviews, if there's anything at all we can help you with, fire across an email to support@tradersupportclub.co.uk. Alright, and that's us for this video. Thanks very much for watching. All the best.